Well, good morning, Gulf Coast, and welcome to another edition of Expert Alert. I'm Jim Tabor, and this is where we have different experts from different types of businesses and services around the Gulf Coast come in and share with you some information that could be educational to you, and especially when it comes to finances. Strojny Financial is with us again this morning. Jennifer and Kerry Milligan. Happy to have you all here in the studio. So much going on.
There's
brand new year, and the first thing on everybody's lips right now is, what will I get for the new stimulus check? Now, I got mine last week.
Right.
Got mine last week. So,
yeah. So I'm sorry, Jim, cut you off, but yeah, our phones are ringing off the hook.
Yeah.
It started towards the end of December about the questions regarding the new stimulus or second round of stimulus. So what we're looking at is single filers getting $600. You know, a married filing joint couple, $600 each would be $1,200. Okay, so it's been a little bit less than the previous, right? But and then with dependents, you can also get $600 for dependents as well in your household. You know, that you claimed on your tax return. Now they have to be 16 and younger, so that's one thing to keep in mind. So for your 17 and up, you know, maybe college kids as well, you're not going to get that $600 for them. Okay, or dependents that are adults as well. You know, so that's what we're looking at getting. They started going out on December 30th, right?
Right.
If they had your bank account, it's going to be pretty efficient. Go in fairly quickly. If they didn't, you know, they're going to. They started mailing checks December 30th, so that'll take a little while to get. You know, so they'll be mailed out. So, and we've had that question where some people have done through banks where they've had done a fast check at a tax office or whatever,
right.
or had their fees paid through a bank service. Well, the bank creates for them a special account where that money flows through and into them, and then they close that account. The first round of stimulus, those accounts were still open, you know, so they were getting their money from that same bank and all this, and now they're closed. So they just need to be aware if you had done it that way, that you're going to get it mailed to you.
Right.
It's going to take a lot longer.
It's going to take longer.
Right. Well, ours were direct deposited.
Right.
You know, and because you asked me if I got a letter in the mail, I was like, no, because we did it file like that. And of course, whenever we do our income taxes, we do it to where they just deposit it in our checking account automatically. Right.
And you should get a letter still, because there's this notice 1444. I get that right? 1444. That's a lot of fours. But you will need that for your tax return this year. Okay. So it's going back to the previous stimulus as well. So wait,
I thought we didn't have to claim this on income tax.
It's not
going to be taxable, but it's going to be a recovery. Yeah. There's a recovery rebate form.
It ties into, there's a lot of people that didn't get it for whatever reason. They weren't in the system. They hadn't filed a tax return. They only get Social Security, and for some reason they didn't get picked up off the Social Security list. So there's going to be a form to reconcile that on your 2020 income tax return.
Okay.
So that 1444 is the official word on what's in the IRS system about what you got or didn't get. And so when we do the actual tax return, if you're due additional money, then they're going to give it to you. If you're due less money, you're still good. They're not going to make you pay it back.
Oh, okay.
Right. And that's really what's going to be important, because I think people might want to understand this. If you're going into, so the people where they're getting the checks mailed to them, and some of them will actually get debit cards. They've done that, or for some people. So some of them will get debit cards, some of them will get, the checks. But either way, when they're mailed to you, obviously it's a longer process. You have to have manpower doing it. I think a lot of this got slowed down with COVID. IRS is really backed up with COVID as well.
Right.
And all this, but so let's say hypothetically you're the average guy or gal that comes in and wants to file your tax return, February 10th or something, okay? So because you're getting a refund, you want to come get it done, get it over with, and get your money. The one thing, you may not have received that payment yet, right? You might not have gotten the check or the debit card. So you as long as you think you're reasonably going to get it, you probably don't want to say I didn't get it, because you would then get it on your tax return. And if the check's in the mail, as they say, then you're going to have double dipped. Right.
Those they will make you pay
then
back.
There's going to have to be a payback, and
well,
it's probably a bigger process.
At one point, President Trump was trying to get to where we were getting $2,000.
Correct.
Right.
I guess that's gone.
That did not go through.
Right.
We had that situation. It happened. So this law went through, I believe, the Senate on December 21st, and then President Trump said, no, we need to get this to be 2,000. It went through the Christmas holiday, and then we were facing a government shutdown. And so he did go ahead and sign the original bill.
Okay.
So it went through the way
And
it
was hoping to
presumed.
get it, prior to everything with the new.
What about unemployment?
So unemployment's been, the additional unemployment has been extended, right?
Okay.
So it's not quite as much. I think the previous one was 600, I believe, but now it's in additional payments. This one's 300. And they've extended that through March, I believe. Yeah. So
Now, the thing you want to remember about that is unemployment is a taxable event, right?
taxable.
So,
So that's
there,
not
we've got to
forgiven.
sort all this money. If you're doing your own taxes this year, you got to be really savvy because you're going to have to sort this money into what's supposed to be taxable and what's not supposed to be taxable.
And we've seen an increase. Well, I just was doing a lady that normally doesn't have to do tax estimates where you're prepaying, would want to come in because receiving this additional unemployment money.
What about, I heard there's a new round of PPP.
Yeah, so PPP's back. I keep thinking, okay, we're done talking about that, and then here comes a new law. So here we go again. So yes, there is a new round of PPP. It is only going to be available for businesses that have less than 300 employees, so what they consider a smaller employer. And then with that, this time you have to be able to show financial hardship, though. So you're going to have to be able to pick out a quarter or a 3-month period out of 2019 and 2020 and compare them. And there's going to need to be a 25% drop in revenue in 1 quarter year over year, if I'm making sense there.
Yeah, you are.
So this time,
I got gears going in my head
this
right
time
now.
you have to show a drop in revenue, which was not the case before.
Because I have a little business on the side. I do photography, and my weddings just went.
Right.
We're just,
Yeah, so
compared
your
to
summer,
2019 to
you compare
2020.
2019 summer to 2020
I'm
summer,
sure
and you have a
wildly
25%
different,
drop,
right.
you're going to qualify for the PPP.
Try 75%.
Yeah. Now, it's going to be based on your net profit. Math is going to be similar to the other PPP process. But when you look at that, you're probably going to qualify.
Right.
So that's good news for some of the people. Now, if you got the first round, you have to have already spent that before they're going to give you the second round. You can't have taken the first round and
What if you didn't take the
not
first
spend
round?
enough money. If you didn't take the first round, you're still subject to the more liberal rules of the first round. You don't still have to show the financial loss. So you can go for the second money. Let's say you didn't get the first money at all.
Right.
You can go apply in the second round under the original rules, which were more liberal.
Okay,
Yeah. So
that's good. But do you end up having to pay it back or report it on your taxes and everything?
Okay, so this is
changed as
new,
well, too.
and it's huge.
I love this new stuff going on here.
Well, on December 28th, I'm like,
Well, by the time we leave here, it may change again now. But this is a good change for people.
This is really good. So I've been preparing, quarterly taxes for my business clients all year. And in doing that, what I've had to do prior to this law change is if they got $100,000 in PPP money, I'm having to take it's going to be fully forgiven. That's the assumption. I'm going to have to take $100,000 in deductions and not be able to use it on their tax return. So effectively, under the old rule, they were going to end up paying tax on that non-taxable money, if they were getting fully forgiven. Now, the new rule says we get to double dip. We do not pay tax on the PPP as income. We do not have to take the expenses that we used for forgiveness out of our deductions.
So
So
that's huge. If they
I've told a lot of people to way overpay. And now fourth quarter, I'm like, don't pay anything. You're going to get a refund because we calculated based on the law in place at the time. Now they've made a law change in your favor. So yay.
So
Yay.
basically, you don't the loan gets forgiven, right? So I don't have impact there on my balance sheet. I don't have to pay it back or cash flow. Then I don't have to pay tax on the money that was forgiven, and the expenses that this money went to pay for can be included to be deducted from my regular revenue.
So it's a win-win.
It's a win-win.
It's something you would normally never see.
Yeah, usually tax law doesn't usually work that way. They give it to you with one hand, but there's a subtraction somewhere else, which was how the original law was set up. They've taken that out in this case, and they're allowing you to both get tax-free money and then still use what that tax-free money was spent on as a deduction. That's very, very rare.
Wow.
But it's a yay. And second thing is second round money will follow those same rules.
Okay. Awesome.
So-
Well, I think the best thing that you can do is make an appointment and either go talk to Jennifer or Kerry at Strojny Financial, and there's the disclosure on your screen there. But if you'd like some more information, or if you still have questions about all this, thank y'all for being here this morning.
Always.
This is
a pleasure.
great. A lot of great information on
Oh,
there.
absolutely.
And I'm sorry, go ahead.
I was just going to say, I was going to wish you a Happy New Year.
Well, Happy New Year to the two of you, and we will see you back in February
We'll be here.
on another edition of Expert Alert. Y'all have a wonderful day.
If you have a question for any of our experts, go to WLOX.com and click on Expert Alert. For a list of any of our upcoming experts, go to WLOX.com and click on Expert Alert.